Hey, it's Scott with Scott Talks Investing. In today's video, I want to walk you through what a 1031 exchange is and give you the basic overview of exactly how it works. So 1031 exchange. Two important timelines to consider: 45 days and 180 days. You have to identify your property, your replacement property. You have to close on replacement within 180 days. "45 days of identifying, 180 days to close." So what is it? How does it work? All right, so let's say an investor buys a house for 200 grand. All right, some odd years later, house goes up in value. House is now worth $500,000. So instead of paying capital gains tax on the $300,000 in gain, which would be at roughly $80,000 or so in the state of California, you've got a 15% tax rate, assuming on long-term capital gains federally, as well as 12.3% for California. So you're looking at 27.3%, roughly 80K in taxes. Now, in order to defer this number, we're going to utilize the 1031 exchange. So we're going to take this $500,000. Let's assume that the property has been paid off for easy numbers. We're going to take the 500 and we're going to go ahead and buy a $2 million 8-unit complex or something. You're deferring paying taxes. You're basically kicking the can down the road on paying taxes on the $300,000 of gain. So you're saving $80,000 in taxes. You're reinvesting into a more expensive property that probably has either better cash flow, has a higher upside in terms of appreciation. There's a number of reasons why you might do something like that. And you're not paying that 80 grand up front. So one common misconception with 1031 exchanges is that you have to go like for like. Meaning if I bought and sold a single family home, I have to go buy another single family home. That's just not the case. So there's a term called like kind. Well, what does like kind mean? Like kind essentially means reinvesting into a property for the purposes of investment. So you can go from a single family home to 8 units. You can go from a single family home to self-storage facility. You can go single family to hotel. I mean, there's a giant list of like kind investment opportunities. I'll throw some in the description below. But I want to reiterate, the 1031 exchange allows you to defer capital gains taxes. There's a couple different timelines as we discussed earlier, and like kind does not mean you have to do single family to single family. Any questions, as always, drop a comment down below. I hope this was helpful for somebody out there. And if you have any questions, always happy to help. Thanks for stopping by.